All right, hello there, finance friends. Thanks for tuning in. This is a brief lecture. This is topic 4, and in this lecture, we'll be giving a very brief top-level overview or introduction to personal financial statements. Okay, these are the essential documents that you're going to want to prepare as a part of your ongoing financial planning. And specifically, you're going to be preparing spending journals and cash flow reports as part of your assignment for this class. So let's jump in. There's different types, but the 3 big personal financial statements are, number 1, the balance sheet. Number 2, the cash flow statement, which is also known as the income and expense statement. And number 3, the personal budget, which we've already discussed a little bit. Okay, so the big 3 financial planning documents: the balance sheet, the cash flow statement, and the budget. I want you to consider that at the end of the day, these 3 statements are tools. And they are tools that will help you to keep track of your progress on your financial journey. Yes, it's going to take you some time to figure out how to prepare them, although I'll give you templates. And yes, it's not the most fun thing to do. But if you look at the opportunity cost of not doing them, or to see it differently, if you look at other things that you spend your time on that are not as valuable, I hope that you see both during my class and after my class the value of these statements as tools. Okay, we know from topic 2 that your goals tell you where you want to go. We know from our last lecture that your financial plan is a path to get there. Your personal financial statements, these documents tell you where you currently are, and therefore they provide a checkup, a diagnostic, a metric to see if you are on the right path toward those beautiful, big, grandiose, long-term goals that you're all going to hit. Okay, so that's what these reports do. Good reports, therefore, you can see, will provide you with direction. They'll provide you with feedback. And they'll provide you with a sense of control over your financial life. Note again that with feedback, this is also about that idea of lifelong growth. And it's also about the idea of being nice to yourself. You know, if you have a bad month, you don't kick your own ass. You analyze it. You ask what happened. You get to those root causes and you improve your path. That's what these things do. Note what would happen if you had a bad month, but you didn't have any statements to tell you. You would never know you had a bad month. And then those bad months become bad years and become bad decades. And then you are not going to hit your financial goals. Okay. And recall again that you'll be submitting balance sheets and cash flow statements and spending journals to me as a part of your grade. And of course, I will share my information with you as a part of the give and take of this journey. Okay. With that said, let's talk briefly about the balance sheet. The balance sheet describes your financial position as is measured by what we call your net worth at a given point in time. So this is a way of saying 2 things. Number 1, your balance sheet basically shows your net worth, which is a key metric in your economic and financial growth. Also understand that your balance sheet is a snapshot document. It shows you your status effective a particular day. Okay, so it's a snapshot document that shows your net worth. And obviously, net worth is critical because tracking your net worth over time is the surest way to see if you're reaching those goals. Therefore, I would recommend to you that you prepare a balance sheet at the end of every month. The second big financial statement is the cash flow statement, also called the income and expense statement. This statement, this document summarizes the total amounts that you have received as well as the total amounts that you have spent, hence the income and expense part of the title, critically over a specific time period. In contrast to the balance sheet, which we just saw was a snapshot document, the cash flow statement is a flow document. It is not a snapshot effective a certain date. It is a flow document that shows money in and out over a period of time. Those periods of time usually being monthly or quarterly or annually, okay? I recommend that you do one every month. The difference between your inflows and your outflows is your net cash flow. And the goal behind all of this, as we discussed before, is to make sure that you design your financial affairs so that every month your net cash flow, pardon me, is positive. Because it's only through positive cash flow that you can chip away at debt, save for the rainy day fund, invest, insure. When you're cash flow negative, not good. Because when you're cash flow negative and you have a gap, you have to bridge that gap either by borrowing with the associated interest costs, or by cashing out savings, or by tapping into your retirement accounts. Okay, so you want to prepare your financial affairs so that you're running cash positive. The cash flow statement, that's how you know you're doing it. The third is your budget. And at the end of the day, while people always get uptight about budgets, a budget is simply a forward-looking, or to see it a different way, a forecasted cash flow statement. The cash flow statements that we discussed right here, those are all about reporting the previous period, the previous month's inflows and outflows. All a budget is doing, it's that same cash flow statement, it's just forward-looking, it's a forecast. A budget will explicitly detail your planned income and expenses over a future period of time, okay? And by tracking those those actual expenses and comparing them to your planned expenses, you can see if you're on target. And that's the key to a budget. So a budget, number one, is a forecasted cash flow, a planned cash flow. You're projecting the money coming in and going out in the future. You then compare that forecasted amount to your actual amount. The difference between the forecasted amount and the actual amount is your variance. And by putting all these numbers together and setting aside some time on a monthly basis to think about it and digest your numbers, you can track your actuals, compare them to your budgets, and see if you're on path. And if you're on path, you give yourself a pat on the back, you buy yourself a big gulp to celebrate, and you keep on keeping on. And if you're not on path, that's okay. You be nice to yourself, but you ask why. You dig in a bit, you do a root cause analysis, and then you gently and with love for yourself and your future self, nudge yourself back on track, okay? So that's what your budget is. At the end of it all, what you need to make these three documents work for you, you need a system to collect and to organize your financial records and to track your daily financial transactions. So while everyone knows what the three big documents are, your cash flow, your balance sheet, and your budget, to do this well and to make it painless and to make it frictionless is really going to be about developing systems, developing habits to collect and organize your records and to track your financial transactions. Of course, if you're astute with technology, this is increasingly easy as technology can assist you, whether it's software or apps or other tech-based tools to make the process of tracking, collecting, organizing, consolidating, and reporting simple, painless. I tend to like paper and pencil because it forces me to actually write things out and think on them. But if your mind works differently and if you prefer the tech approach, go with it. It doesn't matter what approach you take an approach. With that said, I'll leave you with this. Now that you know what those three big sheets are, those three big statements are, and you know the need to have a systematic underpinning to it, I offer you the following immediate actions that you should take. Number one, you need to review the templates. Pardon me. You need to review the templates that I'm going to put on Brightspace. I have prepared for you templates for your balance sheet and for your cash flow. I'll put them in Excel form on Brightspace. I'll leave the sum functions intact. You're welcome to use those if you want. Okay, so step one, review the templates that are on Brightspace. Step number two, take out a piece of paper or open up something on your tech and begin to compile a list of all the different accounts that you currently have. This could be checking accounts or savings accounts, credit card accounts, loan accounts if you have a student loan. It could be brokerage accounts, any accounts that you have. Begin organizing that data and start by compiling a list of the accounts. That list should include, the name of the account, the phone number and or web address where you access that account, your account number, if you're going to keep this confidential, which you would, any login information. You want to have all that shit together in one place so that if something happens, you can access those accounts, or if you had identity theft or something like that, cancel things right away. Also, you just want to be organized. This is a part of being a financially literate person. So you want to review the templates I gave you, compile a list of the accounts that you have, and finally, you're going to want to determine a system, specifically a system that will help you track your daily inflows and outflows, your daily expenditures, and your income. Again, it doesn't matter what kind of system you use. I use paper and pencil. I carry a piece of paper with me every day and I write down what I spend. No big deal. You might use tech. It doesn't matter what system you have as long as you have a system. The big thing though with whatever system is, make sure that you're tracking all of your expenditures. I typically either charge on a credit card or pay cash, so my tracking is easy. I write down my cash and I download my credit statement. But if you're making transactions in other ways, Venmo or any other way that you're making transactions, you can't right now, but using your one card to pay for things, all of those are still expenditures. That's why it's also important to think critically when you're compiling about all the sources of cash that you have, okay? So next steps you're going to take, review the templates I gave you so you can start thinking about your own statements, compile a list of all your accounts, and finally determine some kind of system that you're going to build and use to automate and track your daily expenditure numbers. Okay? This has been an introduction to personal financial statements. In our next couple of lecture topics, we'll take each of these three and build them out in a bit more detail to help you in your preparation. Thanks, and I'll see you soon.